Welcome back to the channel. Today we're diving deep into a project that has been sparking intense debates across the digital asset space, Kaspa. Many of you already know that this proof-of-work blockchain has gained a cult-like following, while others dismiss it as just another passing trend. But in this episode, we're going to break down exactly why institutional investors might soon be forced to take Kaspa seriously, and whether this network deserves a place in your portfolio, or if you'd be better off steering clear. Stick with me until the end because I'll walk you through the macro backdrop, technical achievements, whale accumulation trends, market risks, and community predictions that range from conservative to downright unbelievable. By the time we wrap up, you'll have a crystal clear perspective on whether Kaspa is the dark horse of this market cycle or just another overhyped experiment. This video is for educational purposes only. It is not financial advice. Always do your own research before investing in crypto. Let's start with the macro landscape, because ignoring the big picture is a mistake too many crypto traders make. According to recent insights shared by market analysts like the Money Ape, we may be stepping into another Federal Reserve rate cut cycle, eerily similar to what happened back in 2024. To refresh your memory, last year the Fed slashed rates by a full 100 basis points between September and December. That flood of liquidity lit a fire under Ethereum, propelling it upwards by more than 80% in just 77 days. Now, with FedWatch data suggesting another potential 75 basis points in cuts over the next 3 meetings, the setup looks strikingly familiar. When liquidity re-enters the system, institutions start rebalancing their portfolios toward risk assets. And when that happens, altcoins that offer speed, scalability, and a narrative-friendly story tend to benefit disproportionately. Here's the twist. Many assume proof of work has been left behind due to environmental concerns and regulatory pressure. But what if those same characteristics, security, decentralization, and simplicity, are exactly what makes Kaspa attractive as a hedge against proof-of-stake concentration risks? If institutions decide they need a Bitcoin-like but faster alternative to diversify, Kaspa may be the unexpected beneficiary. We already see strong hints that institutional appetite for digital assets is alive and well. Just recently, Bitcoin and Ethereum witnessed inflows totaling $376 million in a single day. That's not retail speculation. That's serious capital from funds, family offices, and possibly corporate treasuries. But here's the thing. Institutions rarely invest without a compelling narrative. Boards and committees need stories to justify allocation. A project like Kaspa, which positions itself as the world's fastest proof-of-work chain while maintaining decentralization, might check enough boxes to create exactly that story. Institutions don't only chase returns, they chase legitimacy, diversification, and plausible justifications for why they moved capital into a given sector. Kaspa, strange as it may sound, fits that profile. Let's move to trading dynamics because this is where things get very interesting. According to technical analysis shared by Kaspa Daily, there's currently a massive liquidity imbalance on MEXC. Specifically, it takes nearly 5 times less capital to push Kaspa's price up by 2% compared to pushing it down by the same margin. For seasoned traders, such asymmetry is often a sign of thin sell-side liquidity, deliberate market maker positioning, or, in some cases, subtle accumulation disguised as weakness. My own experience tells me these kinds of setups usually resolve in powerful moves, either to the upside if accumulation is confirmed, or to the downside if retail panic overwhelms thin order books. I want you to think about this. Have you noticed similar patterns in other altcoins you follow? Because if you have, you know exactly how explosive these setups can be. Kaspa's current trading dynamics suggest someone big is quietly absorbing supply, even if the charts look unimpressive on the surface. Now, no conversation about Kaspa is complete without addressing the bold predictions circulating in its community. Some groups are forecasting outcomes that make meme coin enthusiasts look cautious. According to one prominent community collective, Kaspa's drop out of the top 50 crypto rankings is being touted as the last opportunity to grab tokens before an explosive revaluation. They've gone as far as suggesting that Kaspa could climb into the top 5, flipping giants like Solana or BNB, with a $10 token being described as the new $1. But let's ground this in math. For Kaspa to hit $10, it would need a market cap north of $260 billion, basically where Ethereum stands today. Does Kaspa realistically have the adoption, developer community, and institutional support to justify that level? As of now, it feels more like speculative optimism than fundamental reality. Still, optimism drives narratives, and narratives drive price action, especially in crypto. Before writing off Kaspa as hype-driven, let's talk about its genuinely impressive technical performance. According to analysis shared by respected developers like PM Polinsky and Yoichi Crypto, Kaspa recently achieved 3,500 transactions per second, double its previous record. For context, that's well ahead of traditional payment rails like Visa's average throughput and absolutely obliterates Ethereum's sluggish 15 TPS. What makes this noteworthy isn't just the number. It's the fact that Kaspa achieves this while remaining decentralized and secure, unlike some chains that sacrifice one of the blockchain trilemma components to boost stats. These aren't theoretical figures on a white paper. These are live, verifiable metrics. This achievement challenges the conventional wisdom that only proof-of-stake systems can deliver high throughput. The big question, however, is whether raw TPS translates into price appreciation in today's market, or if we've moved beyond the era when technology alone dictates valuations. Another angle worth considering comes from altcoin Bonanza, who drew comparisons between Kaspa's current situation and Cardano's legendary run in 2017. Back then, Cardano exploded to a market cap of over $25 billion during peak mania. When applying similar percentage gains to Kaspa, estimates range from $1.25 on the conservative side to over $6 if history rhymes. Their base case prediction sits somewhere between $1 and $6.42 by year-end, assuming market conditions align with prior cycles. Of course, markets evolve, and what worked in 2017 doesn't necessarily repeat in 2025. But investors often look for historical analogs to justify bets. Do you think applying alt-season metrics from 8 years ago makes sense today? Or are we in a fundamentally different environment where comparisons no longer apply? Now let's talk about something that often signals what's happening behind the curtain: whale activity. According to recent on-chain analysis from Kaspa Daily, major holders have been accumulating aggressively. For example, Wallet 6 reportedly added $2.7 million tokens, Wallet 8 absorbed $1.4 million, and Wallet 15 scooped up a staggering $7.5 million. Collectively, that's over $11.5 million Kaspa added by the top 20 wallets in a relatively short span. This is fascinating because retail traders often panic during stagnation, while whales treat such phases as buying opportunities. Historically, when whales accumulate against a backdrop of fear or indifference, something bigger tends to follow. But the skeptic in me asks, are these whales confident smart money, or just bag holders averaging down? That distinction matters, and time will reveal the truth. Another layer to the Kaspa story involves mining. Rumors have circulated that one of the largest Bitcoin mining pools, via BTC, is considering adding Kaspa. If that happens, Kaspa's hash rate could surge dramatically, enhancing both security and decentralization. Since hash rate is the backbone of any proof-of-work chain, this kind of adoption could be game-changing. That said, unverified mining pool rumors have burned investors before, so healthy skepticism is warranted. Even without new pool adoption, Kaspa's current hash rate fluctuations raise concerns. Declines in miner profitability have led to some shutting down rigs, which reduces network security and adds selling pressure as miners liquidate holdings. These dynamics highlight the double-edged sword of proof-of-work design. It brings security when miners are profitable, but fragility when they aren't. Not everyone is bullish on Kaspa. Captain Altcoin recently published a piece bluntly titled "The Ugly Truth About Kaspa." Their research highlights Kaspa's underwhelming price action compared to peers. While Solana surged past $200, Ethereum notched new all-time highs, and even meme tokens like Dogecoin stole headlines, Kaspa lagged far behind. Its peak above 20 cents was followed by a steep decline to the 6 cents range, with current prices hovering between 7 cents and 85 cents. That's a brutal 60% drawdown from highs, leaving holders frustrated. Beyond price, concerns include the failure of the much-hyped crescendo upgrade to move markets and repeated delays to Kasplex, the proposed smart contract layer. Missed deadlines and muted responses to upgrades raise doubts about execution capabilities. Add in declining hash rate, and critics argue Kaspa might be structurally weaker than bulls admit. On the flip side, some analysts argue that today's frustrations are tomorrow's blessings. Mitchell Lim, for instance, claims current Kaspa holders should consider themselves lucky for discovering the project early. He frames the current stagnation as a rare accumulation window before mainstream adoption arrives. In his view, people mocking Kaspa today will eventually regret missing the chance to buy at bargain prices. This split creates a fascinating psychological dynamic. Bears interpret underperformance as confirmation of weakness, while bulls see the same data as validation of early entry conviction. Which side you resonate with probably depends on your broader investment philosophy, whether you prioritize fundamentals, narratives, or sheer momentum. Zooming back out to the big picture, there are unavoidable risks. Even if the Fed cuts rates, ESG concerns and regulatory hostility toward proof of work remain major hurdles. Governments and institutions continue emphasizing sustainability, and energy-intensive mining may not align with those priorities. Meanwhile, Kaspa's delays in smart contract integration leave it vulnerable against ecosystems like Ethereum and Solana that already dominate decentralized applications. The real challenge is whether Kaspa can carve out a unique niche before competitors absorb all the attention. So, where does this leave us? Kaspa is simultaneously a project of incredible promise and undeniable risk. On one hand, the technical achievements are impressive, whale accumulation suggests smart positioning, and macro liquidity conditions could revive proof-of-work narratives. On the other hand, underwhelming price action, execution delays, declining hash rate, and tough competition paint a far more cautious picture. Here's my honest view. Kaspa may deserve a spot in a diversified altcoin portfolio, but only with careful position sizing and clear exit strategies. It's not the kind of asset to go all in on, but it is one worth watching closely. If institutional investors decide proof of work deserves another champion beyond Bitcoin, Kaspa could be the one to surprise us all. The ultimate question is this: do you see Kaspa as an undervalued gem waiting to shine, or a risky distraction in a market full of better opportunities? Thanks for watching. Like the video, drop your thoughts in the comments, and hit subscribe if you want more real-time updates, moves, market trends, and hidden gems.